I'm Kelly Ann Winget, CEO and founder of Alternative Wall Partners. For those of you who don't know me, I own a private equity company in Dallas, Texas. We invest in everything from buyout, from oil and gas to fintech and everything in between. And I get to have the pleasure of sharing stage once again with one of my darling portfolio companies, the Sun Company. And in exactly that, it brings the sun to the world and through her smile and big hair. And, and big brain, which was what we'll talk about today. One of the things that I want to hopefully accomplish in our little fireside chat here is that the relationship between you as an investor and a founder is really important. This is a long-term thing, whether you exit in a year or 10, that you know each other forever. You're building something really incredible, and I'm happy to be a part of it with you, and we've been able to do some really interesting, cool stuff. So I'll let her give her incredible background of what sold me, and then we'll get into it. We're going to try to leave a little bit of room so that we can save time for a collective Q&A, because I think the audience in general is going to have a lot of questions. Yeah. I guess real quick, how many people are writing a check? Currently writing checks into stuff that's cool? Great. And then how many of you are looking for checks from people who are looking for cool stuff? Great. So you want to get a read of the room so you know how to navigate this conversation.
So before I start about my background, I just want to say why I'm here today. Kelly asked me to be here, and I would go to the ends of the earth for Kelly, without a doubt, for many reasons. But beyond that, it really excited me to come here today because as I started out in late 17, early 18, I didn't have places like this to go and to talk to and to hear people. And there is nothing more that moves me or that gives me joy than to come here and hopefully give one little piece of nugget of information that can help somebody in this audience come together and connect with their investor in the way that Kelly Ann and I have connected to, as she said, really create something special. I consider it, and we'll get into it more as we go, like a marriage. And so we'll talk about how you navigate to get to a point where you find a great investor to work with. My background, I'm a former Tesla executive. I left there in late 17 to start the Sun Company. I really did that for three major reasons. One, the business models were not accelerating the mass adoption of renewable energy. Two, I didn't believe lithium-ion was the future of stationary energy storage and would lead the transition. And three, I believe there was what I called a spiritual poverty in capitalism, where a zero-sum game continued to erode our relationships and erode our planet. And I wanted to be what I called a living, breathing example of capitalism 2.0, where we create relationship organization that could be an example in the world. I'm from a small town in the Midwest in Missouri called the Show Me State, and I wanted to show everybody that it could be done. And so that's why I left, and that's who I am, and that's why Kelly Ann and I are here to talk to you today.
So I know why when we're looking for portfolio companies, we end up doing deals together. I like to be super creative and thoughtful about the terms and the relationships that I have with our founders and portfolio companies. I don't just sign on the dotted line of some safe. I really get creative on the structure and like what this looks like. Because again, I want the terms to be mutually beneficial. I want to think about the opportunity in a more holistic way. Can I pull this opportunity into something else that we're working on? Do I know somebody that can benefit from this technology, this product, this service, whatever? And I think that when we met, we spent like 6 months thinking about what does this look like for the next 10 years, and what are the opportunities that are connected to what you're building. And so talk a little bit about, that our engagement and your experience with other investors as you were starting your first big capital raise, and how much was that capital raise?
Yeah. So tell them how we met first.
A Google search.
What were you looking for?
I wanted a woman-owned battery company. And so I was like, I'm a big energy person. I'm 5 generations in oil and gas. Do I think oil's the future? No. Do I think it's going anywhere? No. But there's a way to sustainably move through the system and move towards a more efficient, sustainable energy world. And so we've got it figured out. We know how to create power. We've done a great job. The real issue is moving that power efficiently and storing that power efficiently. We lose half of the power by the time it gets to whatever it is that you're turning on. And so that's a thing that was really on top of mind. We invest heavily in infrastructure, critical infrastructure, energy. And so it's like, I want to find somebody who's thinking about this in a different way, because I hate electric vehicles. I've had my own personal experience with it that I just got out of, which was amazing to finally move away from. And and I didn't have any interest in EV. I was really like, who's looking at the grid differently? And I was like, is there a woman doing it? We don't have a gender or race mandate. I don't care. We invest based on merit. Well, I did Google, is there a woman and the only one that popped up was the Sun Company. And so we spent 6 months going through and just being like, okay, so you're the only one with battery company, so what? Right? But why are we here today?
Yeah. So I think that's such an interesting story of how we came together. When you're talking about raising capital, you're out there pounding the pavement, you're going to events, you're talking to people. I call it kissing frogs. You're kissing a lot of frogs. And Kelly found me through Google search, and it was like, we made it. But to talk about, so let me just give you a little background on the Sun Company real quick, and then I'll talk about my fundraising and what I was out raising, what my experience was in relation to Kelly and the trajectory that we've gone on. The Sun Company Americas, as I mentioned, started in 2018, and it was to provide a holistic cradle-to-grave energy solution to solve the fundamental energy challenges that we have, and we still have, which is energy security, energy reliability, energy accessibility, energy sustainability, energy efficiency, and energy affordability. These things are problems that have been in the system for a long time, and they remain today because we didn't have the products and services in the market to truly solve for them, the technology, the business models. So we set out to do that. We didn't necessarily have to create our own technology, our own software, our own hardware, but as we got into further and further R&D and said, are these solutions going to solve for the next 100 years? We realized that we needed to tackle it ourselves. We also realized that the energy transition would not happen because of the inertia that existed in it without a deep level of trust and a company that could come in and own that mantle of transition and shepherd people through that process. And so that's where we started. 3 divisions were born in that company at that time, which was a solutions division where we just build energy assets for individuals, businesses. The second division was our technology division, which is where our battery technology and our digital twin software lives. And then the third is our flagship where we build independent renewable energy power plants for large data centers, hospitals, master plan communities, et cetera. And Kelly Ann, when she's saying, I wanted to find somebody who was thinking about the grid differently, what we're doing is we believe we're laying a renewable energy macro grid in parallel to the grid that exists today. And we eventually hope that grid will be the base for the entire system. Renewable, sustainable, accessible, affordable, efficient, democratized. That's our objective. Last year on my fundraising journey, what you realize is that that's a holistic approach. It's a unique time in history where a market has such, capacity that you can come in and create a fulsome company like that. But we're not really built like that anymore in the US. We're built with very ingrained systems that have hyper specialization, right? And so building that full continuum of offering to be holistic, to build that trust, to shepherd people through, investors had not seen that. They were like, wait, yes, we love you, we love this, but then I'm not a hardware person, or I'm not a software person, or I'm an operating person. And so we would come up against the idea of them really understanding the breadth and depth and feeling secure enough in what they wanted to invest in that they could handle all of those things that we did. And Kelly Ann, of course, got it, immediately and was like, yes, this is what we're doing. But ultimately what I decided at the end of the last year was to break the companies apart so that it was a cleaner line for raising money, because we develop hardware, we manufacture that hardware. And so now there's a family of companies. The Sun Company Americas, which is our contractor development owner operator. We provide power to large Fortune 100 companies, renewable power, et cetera, in our technology company called the Best Company. That's where we develop our state-of-the-art Redux Flow battery that Kelly was looking for, which, by the way, is completely non-toxic, 100% renewable, a 30-year lifespan. And no fire hazard. So that's called the Best Company.
And 12 times the
Yeah.
density of a Tesla battery.
7x the energy density, 20x the power density for those engineers that are in the room. It's the most widely validated battery chemistry now in the world. So we're really excited to bring that to market in early 2020. And our third company now is called the Good Factory, and that's where we do distributed domestic manufacturing of renewable energy supply chain so that we can fully bring energy security back to the U.S. That's what we do. That's how we were thinking about it differently. And she understood that from day one. But what I will tell you, and what she was saying, we spent 6 months. You spend a lot of time trying to understand, is this a good fit? Is this the right fit? Are they going to write a check, et cetera? Am I bringing value to them? There's a lot of time in there that ultimately deals a lot of times don't get done. Less deals get done than do get done, right? Or more deals don't get done than do get done. Sorry, excuse me. And so, but when I met Kelly, there was not this rush on either party's side, even though we can suck up as much capital. We're doing all of those things, pretty easily. But there was no rush because we knew we were the right fit for each other. She knew that she wanted to work with us. We knew we wanted to work with her. And so we took the time to get to know each other, to make sure there was values alignment, to make sure that we understood and saw the world in the same way, to understand each other's networks, to understand each other's experience, to understand strategically how I was going to bring as much value to her as she was going to bring to me. And I think a lot of times when you're going in to raise money, you feel like you're the low man on the totem pole in the room, and the check writer is the one who, it's important for you to feel equitable to one another. You're bringing equal value to one another, and to make sure that you understand and define that, and it's not ambiguous. We understand who we are and where we're going together.
Yeah, and it's a really important point to remember, and a piece of advice that I give to founders is to own your confidence in asking for money, because if you accomplish all the things that you're set out to do, are giving an investor a 5, 10, 100x return. If you accomplish everything you say you're going to. That's a lot to do on behalf of somebody who's just writing a check in most cases. So you hold a lot of that power in that dynamic, and it's important to be appreciative and understanding that the risk that your partner is taking. But at the end of the day, as an investor, I know that I need to be the most advocating, cheerleading, productive person in that person's in their company, because if I'm doing things that are unproductive or disruptive to the business, then I'm only hurting myself. And so whenever you get super greedy on terms, I've been on both sides. I raise capital as a fund manager. So understanding the relationship between myself and my LPs is, I'm going to be doing this work on your behalf. And I want you to be as active as possible in the companies that you're most interested in. but there's a lot of alignment there. The reason why we connected so quickly on your strategy is because it's the same that we do in ours, right? We're very holistic. We do a diversified portfolio. We're not just energy focused. We're not writing checks for like, oh, I'm only in hardware, I'm only in whatever. We understand that the hardware doesn't work without the software, and the software doesn't work without the hardware. So, if we're not invested either through education or capital in both sides of the deal, it's never going to work. So it's been interesting to create this relationship because I'm a big tax nerd. I love tax stuff. And when I hear energy, I'm like, oh, tax credits, tax deductions, And I'm like, the worst thing is that I didn't have to pay Uncle Sam this year, right? And so when we started going in, I was like, oh, this is what you're doing. Did you realize that it does this, 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 this? And she's like, of course I know it does this, 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 this. And, but she's doing it on large scales, and most of the time for an individual investor, you're never getting access to this. It's going to big banks. Big banks are buying huge amounts of tax credits, tax deductions, tax incentives, and it's never getting trickled down to the individual investor. A big part of what we both do is how do we democratize our systems? And so she's doing it in energy. I am a firm believer of that. As an oil and gas person in general, there's nothing better that can happen to a society than cheap energy. It is the most, it is the fuel to the fire of growth and innovation.
Of everything.
Of
You should-
everything. You have to think about if there's a lot of CPG companies, women really like to start CPG companies, and the big expense of theirs is like shipping, manufacturing. The reason why those things are expensive is because fuel's expensive, transportation is expensive, packaging is expensive. I know that there's people working on sustainable packages that aren't plastics, but like that all right now involves a barrel of oil. It involves electricity, charging your electric car involves natural gas. And so we have to think about and accept that this is all together and connecting. Cheap energy is a big focus, and I've lost my train of thought, but that's what I said. I got excited.
Democratizing.
Yeah, democratizing, yes. We built our relationship on this democratized incentive, and so how can we pass through incentives back and forth through my investment to fuel your growth and innovation? And it's just escalated from there, and that's why we were able to set the terms we set. And I think that, and I would like you to go a little bit detail of the checks you were offered.
Yeah.
Because that's the one lesson that I think most valued people hear.
Yeah. Are we in time? Are we good?
Yeah, we have.
Okay. So we were very fortunate early on that our technology development allowed for, I bootstrapped the company. I was very much, early on, I understood that if I was going to create the type of company I had envisioned, including the culture and this capitalism 2.0, that who I took money from was going to be critically important to whether I was able to achieve that or not. I made a decision to be very selective, to have very high standards in who I took capital from, to take no money from friends and family, and to basically put my whole financial future in here. That was the foundation of which I went out with. And I bootstrapped it for many years. And then when I went out to raise, maybe 3 years in, we were very fortunate that our valuations were very high. But what that brought was a lot of sort of what I would call predatory checks to the table. And I said no to much more capital than I have said yes to, which I think I said a few minutes ago. There were offers to, we will give you your whole amount, which at that time was 42 million. We will give you your whole 42 million, but we will take 100% of the equity and you can earn it back. I had that offer. I had and I've had a lot of lessons, and we won't go into too much of that because I know we don't have the time. But during COVID, that was obviously a time where I said, oh shoot, maybe I said a different word, but this could be really challenging for us. And I was at a crossroads where there was, I think it was 125,000 due to our patent attorney, and there wasn't 125,000 in the bank. And I had a strategic come in and offer $1 million. And they were in the defense space, and I thought, oh, this might be a good strategic, but I didn't spend time getting to know them well enough. And the money didn't show up, and they knew I had to pay this patent payment. So the day the patent payment was due, they called and said, oh, we'll give you the money, but you need to sign all the patents over to us. So I said, no, thank you.
That's what you called me.
I wish that was when you called me, but it wasn't. But I was in my car, sitting in front of the patent attorney's office, and I was crying. And I was crying because I had had the courage to say no. I didn't know how I was going to solve it. But I was going to, and I was going to figure it out. And I was not going to let this break me. And I was going to move on and find the right people. And I went in to the IP attorney and I said, hey, here's the deal. And I just walked them through it. And they said, okay, we got you. And they took care of what needed to be taken care of. And we moved on, and everybody ended up being happy with our progress and trajectory over time. So those are just two of the things that I could tell you over hundreds of stories that I've gone through in raising capital. And I'd be happy to talk to any of you about that later on.
And Kelly Ann called the next day.
And
I think it was short.
it wasn't that long
Yeah,
after it.
yeah. We actually, it was a year before I wrote a first check.
Yes, that's important for everybody to know. It was a year.
It was a year and it started small, and I called it kicking the can down the road money.
I was hoping you would say it.
Yeah.
I was like, she says, we need some kick the can down the road money. I'm like, yeah. Shove it.
Because I know the due diligence process is long, and like the amount of risk I'm taking with smaller checks to just help get to that finish line of me making a decision. Again, I don't ever want to be a burden to the companies that we're really serious about. And I decided, 6 months in, I was like, I'm really serious about this. But I knew that it was going to take me a little bit longer to like really figure out how this was going to work. I didn't want to invest on a safe. I didn't really want to invest in a convertible. And I was like, let's really be intentional about what this relationship looks like. And so, yeah, I provided some kick the can down the road. And so it got us to where we are now. We've been like really, really cool and creative about how we move forward. And now I'm building a completely separate fund around solely her offer.